I might even do it by the end of this month because we are kind of going through the basics. I do want the Fibonacci kind of strategy, the Fibonacci sequence, part of that foundation. I might even so after we go through the basics of the value indicators and we start getting into the by the end of the month, I might kind of try to bring Lonnie in to kind of explain how the music um how his little music theory works. I have not read his book. I have not talked to Lonnie since 2017, 18. So I haven't talked to him in over 7 years. But I'm going to reach out to him this weekend and see if I can schedule that maybe for the end of the month. And for him to understand, so he gets the understanding of what I want from him, I'm going to let him watch my Fibonacci secret. I think I explained it to him like we explained each other's theories 7 years ago, but he probably doesn't remember it. So I'm probably going to unlock the Fibonacci secret and let him watch it so that he can kind of combine his theory and my theory. So when he comes in here, we're both on the same page of explaining, kind of the same concepts. But I'm going to try to do that every 3 months. Maybe have a new guest speaker every 3 months. That's my goal. But I got to find somebody that shares my outlook and my trading style. I'm not going to be bringing people in that believes in options and forex and crypto and high risk markets and all of that. I'm not going to bring them in. And even if that is their style, I'm going to let them know, please do not talk about those things. Just limit it to what I need you to talk about, and that's it. Please do not encourage people, do this and do that. Like I said, I'm going to let them know what our parameters are. But I'm going to try to my best to find people that kind of agrees with our style that I'm trying to teach. So it's not muddled, it's not confusing. All right, so where are we at? Good morning, Kyle. Just to let you know, as you can see, you can't see the presentation. We're transitioning off of TikTok because of the ban. We're waiting to see what's going to happen with the ban. I know, this is something else that even my students may not know. Uh, there's a rumor. I looked it up. There's talks that Elon Musk and Trump are trying to get together to buy TikTok. There's also one of the Shark Tanks, Mr. Perfect from the Shark Tank. He's also looking to buy TikTok as a group. There's a group. I can't remember the name of the group, but they're in the works of trying to find some kind of thing. And the thing is that the articles that I read mentioned that the CEO of TikTok is in talks with Trump and Elon Musk. He's already gone to Mar-a-Lago, so they're in heavy talks to see if there's something that Elon Musk, Trump, or somebody else can do to maybe kind of facilitate the saving of TikTok. But until that happens, until we have confirmation that that's a done deal, we're transitioning off of TikTok. So I want to encourage everybody that's on TikTok, if you do want to see the presentation, if you want to see the full presentation, because I'm probably going to disconnect from TikTok in the next 20 minutes. So you're not going to see the presentation, the slides, you're not going to see the full presentation. If you want to see the full presentation, click the link in my bio, scroll down to the bottom of the page, you'll see a link for YouTube. All right. Hopefully I'll see you there, but you're not going to get the full presentation on TikTok. I'm glad you're here, Kyle, but it won't last. We're going to disconnect in about 20 minutes. All right. So let's go ahead and bring up what today's presentation is. We've been talking about this for the last 3 days. Let me go ahead and recap so everybody understands we're on the same page. Got you there. I got you there. Perfect. All right. What else we got? All right. So for the last 2 days, we have been talking about prime correlation. You cannot learn about this anywhere else. Now, I've already given proof because we've been talking about this for like since day one of me doing this. I've been on TikTok, I've been online teaching this for about 2 years now. We're going into my third year. And over the 2 years that I've been teaching this, from day one, I've been teaching the prime correlation. The prime analysis, I got several terms for it, but the prime correlation is the relationship between the crude oil and the dollar reserve. I've explained what Wednesday and Thursday. Wednesday, I explained the oil supply chain. Yesterday, I explained the dollar value chain, and I showed you why they are so powerful. Why are they the strongest global commodities that literally controls every economy, every financial system, every currency, every supply chain, every product, every industry, every sector. If you were to set up dominoes, the oil would be the first domino, the dollar would be the second domino. Now, I'm going to take the time right now to explain why I keep saying that. Why is the oil the first domino? Because it is connected to every single consumer product. And we explained that on Wednesday. Either through transportation, 60% transportation, as you're transporting the raw materials inside the supply chain. And then you need the transportation to transport it to the warehouse, to transport it to the retailer, to transport it to the customer, to transport it in import exports. You need the oil for gasoline to transport. The second thing we also explained on Wednesday, that if you go through the refinement process, you get 6,000 raw materials or products: plastics, tar, adhesives, pharmaceuticals, textiles. Almost every single consumer product on this planet has an ingredient that comes from oil, and that's the other 40%. That is why oil will always be the first domino, because you need it for every single consumer product. And it applies to the product or the supply chain immediately. As soon as you see the production go up, the production go down, the price go up, the price go down, it immediately affects the supply chain, the supply and demand, and every single price, every single expense for that product. Now, the reason why the dollar is the second domino is because you need the currencies to buy the products. You need the currencies to buy the ingredients, the raw materials for the product. And the reason why it's secondary is because you rely on the Federal Reserve to make their announcement first. And then all of the other 216 other Federal Reserve banks around the world have to respond to the Fed. And then now the rest of the lower banks have to respond to all the central banks. And then the currencies have to respond to the banks as well. And then now the governments have to come up with their economic policies in response to the banks. So you see how that is kind of a slower domino effect, because everything is reacting to the next thing. So anything that happens on the banking level can take weeks or months before it reverberates around the globe. But the oil reverberates within 24 hours sometimes, at least a couple of days. That is why oil will always be first, because it applies almost immediately. People are already adjusting their allocations, they're readjusting their perspectives, they're readjusting their outputs. They can immediately readjust when they see price of oil or production of oil go up or down. But dollar takes a little bit longer, because that ripple effect or that domino effect takes a little bit longer. And then once you have those two dominoes set up, now you're in the supply chain. Probably the third domino looking at the supply chain would be labor, right? Those are the three main things that a supply chain needs. So then after labor, that's when it reverberates to the rest. And you can literally predict anything that happens in the global markets, anything that happens in any stock market around the world, anything that happens in any industry, any sector, anything that happens in any supply chain. You set up the first few dominoes, and then what did I say? Causal sequence. All you want to figure out is what is the last domino. This is how we can predict what's going to happen in the markets. And nobody else knows about this. Well, the institutions know. They just don't call it, they don't call it causal sequence. I came up with that term so you guys can memorize it. That's my job, is to simplify it down. It's a domino effect. It's a ripple effect called causal sequence. And there is nothing that happens in the global markets, there's nothing that happens in the industry you're researching that you cannot apply a causal sequence to. Causal sequence is a universal translator. And did we talk about that on Monday? Right? I only give you universal translators. You don't have to learn the dozens or hundreds of different forms of analysis in the stock market. That would confuse you. That would confuse me. So let's simplify it down. I've given you maybe like 5 different universal translators. And all you got to do is use those. And it doesn't matter what language the stock market is speaking. If you know the universal translators, nothing will escape your attention. And nothing will escape your predictions. At this point, everybody knows I have a 90% accuracy rate because I use causal sequence. I know what's going to happen days, weeks, months, and years in advance. You guys have seen me do it over 2 years. Every single one of my predictions have come true. I told you that Tesla was going to go back over 1 trillion. And what happened? That was my last prediction. But I've given you dozens. And what do I tell you? I want you to be able to do it for yourself. So that is what causal sequence is. So we're going to show you a little bit of how to do that today. So first off, let's go into let's go into I'm going to show you the charts first. Give me a second. Let me share the browser. All right, let's show you the charts first. So this is, first off, let me confirm that you guys can see the charts. I don't want to continue on if you guys can't see it. I've done that in the past. Can you guys see this?
Yeah, I can see it, Coach.
Thank you. Thank you, Damien. All right, so the top chart is WTI oil. The bottom chart is the dollar, the DXY. And I've already told you that this is kind of how we analyze prime correlation, right? You look at the dollar and oil, and we look at WTI. All right, you can look at Brent if you live in England. I got to reach out to Sylvester. Sylvester is from England, and I got Yvonne, that's in Asia. So I got to reach out to both of them, because they would be a little bit different. They would actually be looking at Brent. They can still look at WTI, but it affects us more because it's a U.S. oil. But if you are foreign, you want to look at the Brent. That's the benchmark for Europe. But either way, what you're going to find is you want to look to see if the oil is moving with the dollar or against it. Does it have a positive correlation or a negative correlation? And I want to show it to you. This is why I love showing you the charts, because we talked about this last year, that something happened in 2024 where the old dynamic came back. I explained this dynamic on Wednesday, I believe, where for 70 years, from 1951 to somewhere in the 2000s, or in the in the 2000s, close to 70 years, might be 68 years, 65 years, whatever it is. For that duration, the dollar and the oil moved opposite, right? If the oil went up, the dollar came down. If the dollar went up, the oil came down. That was the old dynamic, because there was this conflict between the OPEC producers and the, I want to say, US producers. Um, but it really comes down to US allied. So anybody that's allied to the US would be on their side, because that would be Canada, anybody in Europe that has oil, whatever it is, Mexico, all of that. So during that 70 years, it moved opposite, right? And then in 2018, the US took over and started becoming the number one producer of oil. Before that, it was Saudi Arabia. US overtook, and they have been the number one producer of oil ever since 2018, for the last 7 years. But something happened last year, and with that new dynamic, the oil and dollar started moving together. That's why we call it the old dynamic and the new dynamic. The new dynamic, when US production took over, US now controlled the dollar and the oil. They controlled US production and they controlled the Fed. So because they controlled both of the global commodities, the oil and the dollar started to moving together. But once again, something happened in 2024 where the old dynamic came back. And it wasn't like the whole year. There were just spurts. There were certain moments when the charts would switch over to the old dynamic. And I'm going to show it to you right here. I'm going to show it to you. So if you look at the beginning of the chart, right? If you look at the beginning of the chart, you kind of see that the dollar is moving with the oil, right up to about here. If you guys can see my mouse, which is about let me see if I can put my mouse over it. Somewhere around January 2nd is when it switched. Isn't that about right? 2024, it moved together. Something happened January 2nd where it switched back to the old dynamic. You see how the dollar came down and the oil continued to go up? I want you guys to see it. This is why we bring up the charts. We want to see if the old dynamic is in place or the new dynamic is in place. And like I said, application. I'm going to explain why. Why is it important? I'm going to explain why. Well, let's look at another chart and then I'll explain why. So this is the US dollar. Well, let me change one of these, because one of these is not right. Let me get rid of this one. It didn't load right. So let's bring in, well, let me just redo everything. Let's go to the Dow. We're going to go to the spot, the Dow spot. I usually don't do futures because there's so many future markets that I kind of want to use a spot. So let's use the spot Dow Jones, and then let's load it with the dollar, right? So I'm going to stop here, and I want you guys to tell me what you see.
See, the dollar went in correlation up to a particular point. Actually, it's still in correlation, I think, somewhat. But
Mm-hmm. You see the spike around November right here.
mm-hmm.
You see it kind of go up a little bit. It's kind of a little bit, sporadic, but truthfully, I think right here. And what was this? November 22nd, it switched. Right here,
Thanks,
it was correlated. But right
Thanksgiving.
here about, yeah, around Thanksgiving, the 25th, that's when it switched. The dollar started going opposite of the Dow. All right. And then that continued. And then right here, it's still the same, still the same, still the same, still the same. That goes up, this comes down. So ever since November up till now, the dollar and the Dow are opposite. So here's what I mean about application, guys. Why are we doing this? Prime correlation first. How far back on the narrative? How far back on the prequels do you want to go? Because if the dollar and oil is moving opposite, and the dollar and Dow are moving opposite, do you see where I'm going with this? You can now see if how oil is going to move in comparison to the Dow. Does everybody understand that, or do you need me to explain it again?
No, I'm following you.
I'd like
Now,
to hear
why
it
am I
again.
using?
I'm sorry, coach. Just explain
Well,
that one more time.
no problem, no problem. Let's do this. And you guys got no idea. I actually like it. That means you're paying attention. That means you want to grasp it. You want to get it. Love it. Love it. Love it. It's the silence that like, what? You don't want me? You don't need me? Love it. Let's explain it again in detail. So here we have the Dow and the dollar. And we're just going current. Right about here, around in November, it switched where the dollar started going opposite of the dollar. So dollar interest rates going up and down, that's what's going to affect the Dow, because that's gonna affect the value and the strength of the dollar. So sure enough, dollar is moving opposite of the Dow. But we also find out that the dollar is moving opposite of the oil. Now, this will make it make better sense. We do not compare oil with the Dow. I've seen people do it. I've done it in the past. And in the past, there has been a correlation. But ever since the new dynamic, you cannot rely on it. You cannot apply the Dow directly to the oil. So what do we use? We use the dollar as the friend of my friend is my enemy. And there's a lot of correlations like this. You can't just apply two different markets immediately. Sometimes you have to go through the sequence. And the dollar is that middleman. You can look at how the dollar's reacting to the Dow. You can look at how the dollar's reacting to the oil. And as that dollar moves, and you see how the other two markets are reacting, that is how you can predict how oil will affect the Dow using the dollar. Does this make sense now?
Yes, yes. What do you think happened around January 2nd to cause that?
Well, let's you know what? Let's add it to the list of things we're going to look up, because I didn't take the time to look it up. I kind of dozed off, but we'll add it to the list this morning. We got a couple of articles we're going to go through, but at the very end, well, you know what? Let's look it up now before we even get into those articles. So, and this is what I do, guys. I love the question because this is what I do. I love retracing. So you can pick any moment on a chart, and I've explained this in the past. Put your mouse, find out the date, and then go put the date in a news platform. So it switched over right around here. So January 6th, right? That's all moving together. And then I would say right here, actually January 2nd. So let's go look up January 2nd, and we're going to put in the oil, because we already know what happened with the dollar back in December. or November. So let's put in oil production January 2nd. Now keep this in mind. January 2nd is so close to December that we may have to go put in December 2024 as well. But let's start with January 1st. And I think I'm going to put in oil production on Reuters, see if there's any articles. And we're looking to see if there's any articles that come out around that date. So let's do Reuters. Oil production January 2025. So this, we're looking for an article basically from last week. 7 days ago would put us around the 3rd. So let's go ahead and click on this. And this is the article that I was going to show you. This is on my list because the weather, the cold weather affected the oil. This is one of the articles that I have on my list. So this article came out the 3rd. So this might be the reason why that oil jumped. Because it's harder to pump oil in cold weather. Colder weather in Europe and US expected to boost oil demand. It's a lot harder to pump oil during cold weather. That's basically what the article is going to show. And so if a cold front comes in and the oil workers can't go out there, because keep in mind, they're in Alaska, they're up in Canada, all of the very cold areas. A lot of our oil comes from Canada. A lot of our oil comes from Alaska. So if it's very cold weather, it can affect the supply of oil, creating a demand, causing oil to jump. Obviously, the oil price is going to jump if there is greater demand. Does everybody understand that causal sequence? Less production means more demand. That's why the price goes up, because there's less supply.
Yeah.
So that's most likely the reason. And you notice how I did that? I found the date on the chart, and then I came to the articles to find an article around the same date.
Good. Yeah. I appreciate, you actually going through that, and showing us exactly, your line of reasoning, and then, you execute and going back and then, actually finding that as you did.
Yes. Yes, sir. So anybody that wants to figure out, if you want to go deeper, find the date on the chart, find the right keywords, and then come back to the news and then try to figure out if you can find an article around typically a couple of days before the event, the day of the event, or maybe the day after, depending on if anybody knew what was going on. If they didn't know it was coming, then you'll see articles like this that comes like the 3rd. If they figured it out the same day, it'll be the same day as the jump. But sometimes you even find articles telling you about it before it happens. Some level of speculation or prediction. But yeah, it seems to be the cold weather is what caused the jump. And then when the oil jumped, this is the causal sequence. Once the oil jumped, that caused the dollar to go the opposite direction. And remember, I think it was me and Jay was trying to figure out, why is the markets down? Why is the markets down? This is why. The oil jumped, the dollar came down, and then the Dow or the index futures responded to the dollar. And when the dollar, well, that's not really true. Well, let's go back and look at it. Let's go back and look at the dollar Dow chart, and let's go ahead and look at that at last week. So dollar came down I guess you can call that an up, but it really wasn't an up when I was trading it. I guess overall it was kind of a bullish, but during the smaller time frames, it was bearish. Like every day was bearish. But if you look at the overall trend for 5 days, I guess you can call this bullish. But this is how you can take the prime correlation and you can basically analyze any market. As long as you're looking at look at this, the Dow versus, I'm sorry, the WTI versus DXY. This is where you start. You first find out if they are in the old dynamic or the new dynamic. Then you either want to take, depending on what the market is. There are some markets that are connected to the oil, like gold. Gold has a direct, I know it sounds weird. You would think the gold has a connection to the dollar. It has a stronger connection to the oil. So you can actually pull up if you were like looking to trade gold or analyze gold, you would actually compare the oil and the gold and then compare the oil with the dollar. What's another you would pull up the transportation kind of chart and then compare the oil to transportation and then compare the oil to the dollar. Right now, let's say you're looking at a retail chart. I would look at the dollar in retail. You see what I'm saying? So you want to make sure that whatever market you're analyzing, the dollar or oil, you're tying it to a market that's connected to it. And then through the prime correlation between this, you can kind of work out the correlation between all three, between the dollar, the oil, and whatever third market you're looking at. Now, if you're new to this is not mandatory. It just gives you a better read. Since we're talking about the prime correlation, I want to go deep and show you how deep the rabbit hole goes. This gives you a lot of predictive information of what's going to happen in the future. All right, so those are the charts. And I'll say it again. Notice we're looking at charts, but we never drew a line. We never looked at retracements. This is how you really analyze charts. This is what Charles Dow used. This is how he applied the charts 100 years ago, 120 years ago, 140 years ago. So now let's go ahead and I'm going to leave up the dollar and oil just in case we got to go back to it. So now let's look up some articles on the oil just to kind of get an understanding of what oil is doing in 2025. So right here it says crude oil makes a strong start in 2025. And this is just letting you know the sentiment. How does everybody, it's talking about the Brent, the OPEC, but it just kind of gives you an understanding of what is the sentiment of people. How are they viewing the oil? That's kind of what the articles are supposed to do. They're giving you the sentiment analysis. All right. Despite recent gains, oil prices have been mixed over the past year. Brent oil dropped 1.6, while WTI went up 5.6 in the last 12 months through January 7th, 2024. This belays the wide 52-week range, with Brent trading between 68.6 and 92.18, and WTI is at 65.2 and 87.6. All right, but they're basically saying that oil is starting off strong. They're factoring in production levels in OPEC and Russia. They're factoring in Trump tariffs. Like, really good article. I will be posting this in the newsroom when this is done. All right, let's look at more articles. Oil settles up 1% as cold weather in the U.S. And Europe drive winter fuel demand. So once again, cold front comes in. The workers can't go out. It's too cold for them. So they have to wait for the ice to melt. They have to wait for the storm to pass. But when they're not out there pumping, demand, supply and demand is affected. And because of that news, once again, isn't that what the institutions do in their Bloomberg terminal? This news comes across them. They realize that the workers are not out there in the supply chain, and they adjusted. They bought and sold based on the data in the supply chain. And this is what I explained earlier this week. We want to do the same thing. We don't want to trade on the charts. We want to trade on the information directly plugged into the supply chain. We want to trade exactly like the institutions are doing. We want to be a part of the hunt, not a part of the herd. It's that simple, guys. Why would you want to trade against the institutions when they get it right the majority of the time? And I'm showing you how and why they get it right. Because they're using causal sequence the same way I'm teaching you to. Right? So basically from this point, what's the next domino? Like I said, application. What's the next domino? The next domino is the workers going back to work. Watch the Weather Channel. Plug into the Weather Channel. See how Alaska's weather is. See how Canada's weather is. See how Europe's weather is. And when the cold front passes and the workers come back out, the oil price will come back down. The dollar price will adjust, and then the stock market will adjust. It really is that simple. You're not hoping, you're not wishing, you're not guessing. All you got to do is follow the weather to know when the workers will come back to the supply chain. And you can literally predict when the stock market will come back down or go back up. Let's look at another article. Oil market set to be in surplus despite OPEC plus action. So this was in December of last year. Obviously, this is before the cold front, but they are speculating or predicting that even though OPEC typically cuts their supply, right? Let's read it. The global oil market is set to return to surplus in 2025, despite OPEC extending supply cuts. That's what they always do. They want to keep the oil price high so they're making more money. But what did I also tell you? With the U.S. being the number one producer, they can undercut OPEC. OPEC can't pull that bull crap anymore. They don't have autonomy anymore. They're not the apex.
Do you think that's what's going to happen this year with the new administration? Do you think that that's what's going to happen? Because I feel like Trump is going to be very strong in us, using what we have as a resource. Like, I feel like he's going to undercut it.
All right, so let me qualify this. The Fed is a separate entity from the U.S. government. Let me start off with that. The Fed is a separate entity. Most people think that the Fed is a government agency. It is not. The Fed is a private bank that does not need the U.S. permission. Now, they will cater to the U.S.'s whims. They'll cater to the U.S.'s suggestions. They'll cater to the U.S.'s requests. But the Fed is not required to acquiesce to anything that the U.S. demands or requests. The U.S. responds to the Fed. So I say that to say this. The same thing applies to the U.S. oil producers. Obviously, there's this really delicate balance between the relationships. because those same oil companies need politicians to pass certain laws or open up the reserves or whatever it is. So there is a balance between that relationship. But bottom line, the oil companies do not need the government's permission to do certain things. So Trump can say, well, I'll do this and I'll do that, and I want this and I want that. When it really comes to it, and the reason why I say it is because the U.S., and this will make sense once I explain this, the U.S. oil companies will take their direction from the competition with OPEC well before they take it from the government. They have more of an obligation to compete against OPEC than to listen to what Trump wants to happen. Because Trump might give them advice or make requests that goes completely against the competition with OPEC. And the oil companies have an obligation to their shareholders to make profit. So if Trump makes some kind of request that does not go in line with that competition against OPEC, they're not going to listen to Trump. Does that make sense?
It does. Yeah. Thank you.
You're welcome. They're going to try their best to kind of acquiesce to both sides. But if it comes down to making a final decision, they have to follow. And that's why I love that I gave you guys that that PDF on the Enforce of the 7 forces of competition. And that is inside the 2.0. I added that to the course. But that's really where these major market leaders, they have an obligation to follow those 7 forces. And if they don't, they're going to lose. They're going to lose market share. They're going to lose revenue. They're going to lose profits. They're going to lose market cap. So they have an obligation to follow the 7 forces of competition. And like I said, once you get the course this weekend, all you got to do is type in force in the search, or look at the bottom of the table of contents and you'll find it. Or you can go back to your WhatsApp and I posted the PDF infographic. But they're going to follow the 7 forces of competition well before they follow anything Trump says. Because we know Trump's going to make requests like the change in the Gulf of Mexico to Gulf of America. And then he made another outlandish statement about bringing Canada into the 51st state. And I watched Trudeau's response. He was on CNN yesterday, and he was like, that's never going to happen.
Right. Just crazy requests.
Yeah, but like I said, there are more
crazy.
Yeah, there's so many more important things to address, and he's just kind of shooting pheasants when he should be shooting birds. He should be shooting turkeys. He should be shooting bald eagles. But this man is shooting pigeons and pheasants. Who cares about the small stuff? Nobody cares about the Gulf of Mexico's name. No, everybody knows that Canada is not coming, and I still believe that Canada is. Now, you guys, let me know: is Canada still a British Commonwealth, or did they annex from UK?
That's a good question.
I believe they've annexed from them, but we still
that's what I thought.
Like the Queen, like we still recognize.
Yeah,
and that's the thing. Sometimes they'll still kind of engage and kind of give them the respect of that thing. But I believe several years ago they annexed themselves from the UK.
Oh, for sure. But they do follow some kind of like British customs, like in terms of, the way they spell things, and you know what I mean? Like they still, fall in line with that. But yeah.
Well, yeah, there's no way Canada is in such a strong position. And I think that's what Trudeau was trying to say. He says, because we supply, or they supply, that's what he was saying, we, talking about himself. He says the Canada supplies probably about 30 to 40% of resources that America needs. So they're in a better position by staying separate. Because here's the other thing. You can see how much, in comparison, you can really see the turmoil between Canada and the U.S. Canada was once none of U.S. problems. Why would they bring in? Because you know what's going to happen if they bring in the U.S. I'm sorry, if Canada was being brought into the U.S. Everybody's going to migrate to Canada. Canada don't want none of our problems.
And the US might not want to be part, US citizens might not want to be part of Canada if they consider you're heavily taxed in Canada. I mean, that's the real truth.
Well, what about places like California, New York, that's already
True. Canadians I
you
could
see my
see falling
point?
like there's a lot of Canadians that go
Yeah,
to California for sure, but you have to really
and
think
that's
about
and that's
you
why
want
that's
to be taxed the way it is, and it's more of a socialistic society than America is for sure.
yeah, that's and those would be the ones that would actually go to Canada. The people in New England that are heavily taxed, Maine, New Hampshire, Vermont, Massachusetts, New York,
New
and
York
then everybody in California as well.
Right.
and
So
Canada,
basically, your
they
coast.
do. I'm sorry.
Oh,
Yeah,
sorry. Go ahead.
Yeah, I was
wait,
just gonna say Canada has the universal health care coverage.
exactly,
Right.
exactly. And do you think that the U.S. is going to let that universal health care sit there if they brought them in? That
Exactly.
goes
That's what I mean
completely
about
against their
social.
whole.
Yeah.
Yeah. Now we're going to talk a little bit about that later. Like I said, I got this new little topic that I want to bring in that's kind of being introduced. So that's kind of a segue. Let me get through these articles and we'll come back to that. But yeah, there's no way. But just recapping. It's just Trump is going to make some outlandish kind of request to the oil companies, and like I said, they're going to choose the seven forces way before they acquiesce to anything Trump has on his brain at the time. But this article is letting us know that as everything settles back down, there most likely will be a surplus of oil. And then let's walk through that causal sequence application. If what this prediction is true, all right, and this is ING, they're saying that there's going to be a surplus of oil. And keep in mind, there was a surplus before, right? If you remember at the beginning of 2024, we had a whole Money Monday where I showed you guys that they were fighting over new oil plots in Texas. And then I also showed you that they had around the Gulf of Mexico, they had these reserves in these little bunkers underwater. So it's possible that they can get back to that where they have that large surplus of oil reserves. But once again, if we go through the causal sequence of the charts we just showed, if oil reserves go up, that's more supply. More supply means the price comes down. If the price is coming down, dollar's going up. And if the dollar goes up, the stock market is going down. And the opposite is true. If oil, like right now with the oil, if the oil is in demand and oil prices go up, well, I think it goes the opposite. Let's start with interest rates. If interest rates are coming down, that means the dollar's coming down. This is a better way to explain it. If interest rates are coming down, because I'm going to show you an article that's going to explain what I'm explaining now. If interest rates come down, which is what we're expecting, right? If interest rates come down, that means the dollar is going to come down. If the dollar comes down, that means oil is going to go up. If oil goes up, that means the stock market is going to go up. Let me see if I can find that article. Now, keep in mind, that's at the current dynamic. The dynamic can go back. So U.S. oil production growth to decline in 2025. Production will decline. This is what I just explained. This is what's going to cause oil to go back up. So of U.S. oil production, this article is January 8th. This was 2 days ago. They're predicting that the U.S. oil growth is going to decline, causing oil to go up. If oil goes up and the interest rate confirms, the dollar is going to come down. So you got two metrics showing you that the dollar's coming down. The dollar's going to come down opposite of the oil going up, and the dollar's going to come down because interest rates are coming down. And if the dollar's coming down, the stock market goes up. This is what we're looking for. Does anybody need me to explain that again?
I got it, Coach.
No, I'm following you. I got it. The dollar starting to go down is gonna send prices, ability to buy down. So everything, I mean, everybody's gonna be able to buy more and do more. So yeah.
Now to stay on the narrative, to make sure the narrative is still in play, that the narrative didn't change, that is why you got to keep coming back and looking at this.
Mm-hmm.
To make sure that negative correlation is still in place. Especially the next, not the next, but every single Fed announcement, you want to do this before the announcement is made, so you can know, so we don't fall for that trap that we did in December. Do a little bit of due diligence, find out where the correlation is, and you can figure out. Now, I keep telling you, and I found an article, I didn't include it because I only found one article, and what do I tell you? You need at least 2 or 3. But I did find one of the state, I shouldn't say state because it's region. I did find one of the U.S. central banks. Harkin, I believe his name was. He's a governor for one of the regions, because I believe there's 12 central banks in the U.S. He's one of the 12 governors for one of the central banks. He speculated last month in December that the Fed was going to put those cuts back on the books. I also predicted that the Fed is going to put those cuts back on the book because there's no way they can hold to it. He specifically, and I proved that to you last month, he did that specifically to drive the markets down. He didn't have to say that. He could have held on to that. And like I said, we proved it in 2024 because he made a prediction in 2023 that he didn't stick to. There's no way you can say there's only going to be 2 rate cuts in 2025 because the markets are going to do something. The oil is going to do something that's going to change your mind, and you're going to put those cuts back on the books. So there was a governor called Harkin that actually predicted that in December, and then he just came out with an article in the past couple of days where he doubled down. He reconfirmed that there is going to be there's going to be more than the 2 rate cuts that he predicted. And that's what we're waiting for. We're waiting to see the Fed make that announcement. That's all it takes, is the announcement. That's what it took in December to drive the markets down. So as soon as the Fed make the announcements that we're going to add the cuts back on, you're going to see that market jump. Hopefully the same amount that it dropped. But just showing you how the oil is affecting everything. I think we got one more article. Yeah, we got one more article. North American oil firms tackle change in technology. I love this article because this gets into the 5IR. And this whole article, like I said, all of these articles, guys, I will post in. Well, you know what I'm going to do? Because we're doing this in the Zoom, some of these articles I'm going to post in the newsroom, but I'm going to make these available. I'll put it in a Word document, and I'll make this available in the student room, since we are doing this live. So I will give you these articles that you can kind of look at. But this is a really good article. And basically what it's showing is that they're implementing AI on everything. AI predictions. And I might even showed you guys videos earlier in 2024 where they had predictive models on weather, predictive models on satellites, predictive models on cutting expenses. So that's basically what they're confirming with this article. that they were very reluctant to implement the new technologies, but they see the benefit of it, and they realize that it can reduce costs, and increase efficiency in all of this. So I wanted to at least show you this, because these are the kind of things that are still a part of the causal sequence, because if they are introducing this to the oil industry, it's going to reduce costs, and reduce costs means more profits. More profits mean it's going to affect the oil across the board. Now, there was one article that I had for the dollar, and then after that, we'll get into that topic that I wanted to talk about. See if I can find it. Hope I didn't delete it. I seem to do that a lot. I think I did delete it. Give me a second. Let me find it. All right, there we go. Let me delete some of this. Well, we'll talk about that in a minute. This is the article. Dollar climbs to third straight session. Sterling slump continues. This is the article that I wanted to show you of why the markets are bearish, because we just showed you that the dollar moves opposite. This is the 9th. This is yesterday. This is the article that I wanted to show you to prove to you why the markets are down, because if the dollar went up 3 straight sessions and the Dow Jones is moving opposite, this explains the bearish sentiment. This shows you why looking at that correlation will give you the predictive powers you need. It all comes down to the dollar and the oil. They explain everything. They are the narrators of the story. They are the antagonist and protagonist. They are the main characters. Now, I don't specifically know why the dollar went up 3 straight sessions. That just takes more research. Like I said, I dozed off as I was putting this together last night. I wasn't able to finish it, but finish that research today, during our day. All right, so here's the final thing that I wanted to introduce. I have always wondered, here's a final topic. I have always wondered why the U.S. does not have a sovereign wealth fund. Is there anybody that doesn't know what a sovereign wealth fund is?
I don't know what it is.
I've explained it before. So a sovereign wealth fund is a government's investment portfolio. And all of the major governments have one. China, Saudi Arabia, Japan, Australia. Let me look it up. There's a Wikipedia page. And all of the major hedge funds and investment firms, they're the ones that manage. When you see those investment firms talking about they got $15 trillion of assets, because they're managing all of these sovereign wealth funds. China, Singapore, UAE, Norway, Saudi Arabia, Kuwait, Hong Kong, Qatar, Australia. United States has some of the states have funds, Alaska, North Dakota, but there is no United States sovereign wealth fund. There's like 7 states that have one. Turkey, South Korea, Russia. Why does the US not have a sovereign wealth fund? They're the #1 holder of Bitcoin. And then I looked up an article that says that all of these sovereign wealth funds total about $12 trillion. So why doesn't the U.S. have a sovereign wealth fund that they can invest in the U.S. economy and the global economy? You don't think that that sovereign wealth fund will take care of some of their deficit, the $33 trillion deficit? And like I said, the government's already corrupt. So it's basically insider trading. They can make the market do what they want. So this is something that Biden introduced. They have been talking about it for years, but Biden introduced it last year. When Trump was asked about it, he doubled down. He says, "Yeah, that's a really good idea." And then here's an article, September of last year. Congressman Morgan McGarvey, he introduced legislation to create an American sovereign wealth fund. Now, this is like all echo. This is all noise, because this is not a bill to create it. This is a bill to research creating it. This is noise. This is just a free check. That's all this is. Morgan McGarvey is asking the government to give him a blank check as we research why this would be a good idea. We don't need to research it. But having a sovereign wealth fund will answer a lot of the U.S. issues. All right, guys, I'm going to say goodbye to you on TikTok. I hope you guys learned a lot. If you want to see the rest of the presentation, click the link in my bio, go down to the bottom of the page, and go to YouTube. We're not on TikTok anymore. Enjoy the rest of your day. So this is kind of what I'm going to kind of monitor, because the U.S. having its own sovereign wealth fund is going to be a catalyst for a lot of changes in the financial industry. It's gonna spark a lot of regulation, because right now the U.S. government don't have any skin in the game. But if they are a part of the investment, ecosystem, then you're going to start seeing them pass a lot of regulatory laws, because they don't want to lose their money in either. Number one holder of Bitcoin. But if they have skin in the game, you're going to see them kind of push for things to regulate. And that's going to allow that sovereign wealth fund to make a lot more money, safer environment. So they'll make the money a lot more consistent and a lot faster. So I'm going to monitor this to see where this goes. See if this is something that they are interested in doing. But if Biden endorsed it, Trump endorsed it, and they have a bill on the floor to like research it, it's a good sign that it may happen. Especially when you look at all of these other countries that also already have one. And we're talking about decades. These countries have had sovereign wealth funds. But I'm interested to see who do they give the sovereign wealth fund to? What investment firm is going to get it? Is it going to be a U.S. firm? Because that would be double dipping. Or are they going to give it to an outside firm outside the U.S.? So I'm interested in how they set everything up. It's going to be set up through the Treasury Department if you read the article. But I will be monitoring it. Go ahead.
Coach, what do you think it'll be, the wealth fund will be applied to? From what it's showing, it's just because I was following you naturally. Alaska has a form, somewhat of a sovereign fund for permanent, for more for like renewable natural resources. And Texas, I know Texas, growing up in Texas, this has a wealth fund for the schools and such. So what do you think they would initially prioritize it, just out of curiosity?
I'll qualify that the majority of those state sovereign wealth funds are, if you look at the name of the trust, you are correct. They usually put it in some kind of an education trust. But we both know that they're not using it all for education. We are the dumbest country in the world. They're not using it for education. But they're hiding it there to make people think that, oh, we're going to put it in education. No. They're applying it to other places, but the actual trust or the fund is called an education fund. That's the first thing we got to qualify. That is not going to education. In no way are they doing that. Now, the second thing is the Alaska fund is actually able to pay. I don't know if it's every citizen, but if you go look up the sovereign wealth fund for Alaska, it mentions that they can pay each resident $1,000. I don't know if that $1,000 is monthly. I don't know if that $1,000 is yearly, but they can literally pay whatever they're making in that sovereign wealth fund in Alaska. It specifies that they can pay $1,000 to each resident. I just don't know if that's monthly, quarterly, or yearly. So is this something that, well, we know the government's not just going to start cutting checks for everybody, but they can apply some of that to different departments. And even in the article, it mentions some of the places that they were looking to apply it. Let me see if I can find it. Extend child tax credit, universal health, universal child care. So they do give some of the like some suggestions on where the money might go to. The UK just launched a $10 billion national wealth fund. So like I said, I think it's inevitable. Yeah, here it is right here. The Alaskan Permanent Fund, funded by Alaska's oil resources, provides annual dividends. There it is. So every Alaskan resident gets $1,000 average. Isn't that crazy? Now, what the US might do, you got to understand how they're going to set it up. If they were to set something like this up, they're not going to give you the cash. They're going to give you a credit on your tax. That's how the US government is going to set something like this up. You'll get the stimulus, which is what they will call it, but they're not just going to send you $1,000 check in the mail. They're going to give you $1,000 credit on your tax to incentivize you to pay your taxes. But I thought this was real interesting. It kind of goes in line with what we were talking about yesterday with all of the different funds, all of the different debt swaps. It all goes into that same little bucket. Because a sovereign wealth fund, one of the primary assets that's in a sovereign wealth fund is bonds. More than 50% of the portfolio of every sovereign wealth fund is bonds. And we know that the US has the bonds already. So all they got to do is take all of their bonds, take all of their Bitcoin, take a little bit of extra money from whatever department. Now, let me show you this. Did I keep that article? I didn't keep the article, but I was reading an article, and it basically said that the Fed has over $7 trillion. It used to have 9 trillion. That's what the article said, that their assets in 2024 going into 2025, their assets went from 9 trillion down to 7 trillion. Now, I believe that they took profits because, like I said, the federal government, the Federal Reserve is a private bank. So that $2 trillion was probably, taken out and then distributed on in all of their shareholders. And that's a lot of money, $2 trillion. But they still have $7 trillion on the books. And if you guys didn't know, that is the primary focus when they raise and lower interest rates. They're not raising it. They're not raising and lowering interest rates for us. They're not raising and lowering interest rates for other countries. Their primary decision will be for their trillions of dollars. And then they'll see if that decision benefits or affects other areas of the global economy. But the original reason why they're going to change interest rates is for their own selfish gain. The same reason why the OPEC will keep their production low, to make more money. The Fed and every central bank is a private bank with a purpose of making profit. And that's why it gets muddled, that people think it's a government agency looking out for the interests of the American people. It's not. It is looking out for the profits of its private bank and its private shareholders. I know it's wild, but that is the way that they have allowed our banking system to be set up. And I believe I'm also going to be monitoring this, because I believe that the sovereign wealth fund will be in competition with the Fed. I haven't done the research yet, but I don't see, because the sovereign wealth fund will be a part of the Treasury Department. And the raising and lowering of interest rates is going to affect the American sovereign wealth fund, which is going to really fuel that competition or that conflict between Trump and the Fed president. You notice how that keeps coming back around? So like I said, I'm monitoring it. I'm trying to see all the directions, all the causal sequences of it. But I will be letting you kind of, and obviously you guys can monitor it yourself, but we will discuss this in the future as I kind of monitor what's going to happen with it. All right, guys, I'm going to go ahead and get off of the YouTube now. I'm going to go back into the private Zoom. If you guys have any additional questions, if you guys want to do any form of a Freestyle Friday where we do some private analysis on any of the dollar and oil, we can spend a couple of minutes, maybe another 15 minutes on that. So I want to thank everybody on YouTube for your attendance. I like to see that. We got about 4 people. I love that. So guys, I'm going to be back on YouTube. We're not doing TikTok anymore. So just stay on YouTube. I will usually broadcast around 7:45. All right. I have my private class with my students first for about 15-20 minutes, and then we go live around 7:45. So just kind of stay on the YouTube, log in, and wait. Usually around 7:45 is when I go live. All right. If you don't see me go live, don't go back to TikTok, because I'm only going to just send you back to YouTube. We're no longer on TikTok until they figure out what they're doing with it. So I love to see you guys here. I hope you guys are learning a lot. Keep coming back every single day, 7:45 to about 8:45. That's usually going to be the time that I'm going to be on YouTube. 7:45 to 8:45. You're going to learn some amazing things that you can't learn anywhere else. If you want to join the Zoom, you want to join the actual student community, go to cheetahInvestors.com or cheetahInvestors.com/YouTube, and you'll see all the courses. You'll see everything. There's a WhatsApp button on the page where you can reach out to me directly and ask me any questions. You guys enjoy the rest of your weekend. Be safe. I'll see everybody bright and early Monday morning, 7:45. You guys enjoy the rest of your day and your weekend. Thanks so much.